Starbucks Corporation, stock ticker SBUX, is down 13% in the past year and is starting to trade pretty close to their 52-week low. So in this video, we need to address a lot of the news surrounding Starbucks as of right now. We'll dig into their investors' presentations, and like always, we'll be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Starbucks, and you can download that on my Patreon page at the link in the description. So let's go ahead and start digging into it. Again, Starbucks over the past year down around 13%, and year to date down 4.2%. Now obviously we've only had a few trading days, but 4.2% is still a pretty significant amount for only a few trading days. If we come over here, we can see the starting dividend yield sitting at 2.45%. So a relatively average starting dividend yield, but let's go ahead and look at those dividend metrics. If we look at dividend history, we can see 13 consecutive years of dividend growth, and over a 10-year time period, really nice dividend growth going from 13 cents per share quarterly all the way up to now sitting at 57 cents per share every single quarter. So when we look at the dividend growth rates for this company, I think you're going to like what you see. The 3-year sitting at almost 9%, the 5-year at 10%, and the 10-year dividend growth rate sitting at 17.1%. So very solid dividend growth over the past decade, obviously something we like to see. Now again, none of that matters if the dividend payments are safe. So let's go ahead and click on our dividend safety tab. And keep in mind, my favorite payout ratio to look at is the cash flow payout ratio because dividends are paid out of free cash flow. And we can see the cash flow payout ratio for the trailing 12 months sitting at 52.67% and forward looking sitting at 44.56%. Overall, I'm pretty happy with that cash flow payout ratio. It leaves around 60% of the free cash flow left to do things like reinvest into the business, buy back shares, or pay down debt. And speaking of which, if we jump over to the financial statement and click on balance sheet and scroll down, we can see buying back shares is something this company has been actively doing. If we come right here and look at it charted out, we can see over the past decade, pretty solid job of buying back shares. Now it has slowed down a little bit over the past 5 years, but again, we've also been seeing returns to shareholders in the form of dividend payments. So let's go ahead and scroll back up to the top and start addressing some of the news currently regarding Starbucks. Now the most recent news came out just the other day, and Starbucks has been accused of rigging payments in app for nearly $900 million gain over a 5-year time period. Now keep in mind, as of right now, this is purely an accusation, so nothing has come of this yet. And with this news being so new, there's really no way to know exactly what's going to happen with this. So we're going to keep moving forward, but we can also see Starbucks says it is ready to restart union negotiations in 2024. This has been an ongoing process for Starbucks for a very long time now, but honestly, it usually gives them pretty negative press. Now what I really want to do is take a moment to jump into their investors presentation, which was released in late 2023, and I think there are some great insights we can pull from a few of the slides in this presentation. So let's go ahead and start digging into it by jumping to the 8th slide. Now the first thing we can see here is our fiscal year 2023 results and our 2024 guidance. Obviously something that is important for us to look at, and we can see revenue growth for 2023 was sitting at 12%. That is very solid revenue growth for a very established company, and earnings growth sitting at 20%. That is massive earnings growth again for a well-established company. If we look at the guidance for 2024, we can see revenue growth is expected to stay in line with that, and earnings growth expected to stay in line with that. So really good growth metrics on the top and bottom line for Starbucks. If we jump over now to the 21st slide right here, we can see massive store sales growth in the US going up 50% from 2019 to 2023. That is massive growth in a very short period of time. Now, if we jump all the way now to the 51st slide, we can see international growth is expected to be a huge driver of overall growth for Starbucks. They now have over 20,000 stores outside of the US and are targeting around 10% growth. And a huge area of focus for Starbucks internationally is currently in China. China currently has a rapidly growing middle class. In 2022, it was sitting at around 450 million, and in 2030, Starbucks is projecting that number will be sitting at 700 million. So that is a large number of people that will be entering their target audience. And they're also expecting the percent of consumers who drink specialty coffee to increase over the next 10 years as well by a pretty rapid amount. So if there's one single takeaway we can take from this investor's presentation, Starbucks is very bullish on their future growth over the next decade, especially in emerging markets. They're being aggressive with their growth in China, and they expect this to lead to over 10% year-over-year revenue growth and potentially even higher earnings growth. So with all of that being said, is Starbucks currently undervalued, trading at $91.98, again pretty close to its 52-week low? And to answer that question, we're going to be jumping into my stock valuation spreadsheet and running Starbucks through a few different valuation models. And like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, then you can head over to my Patreon page at the link in the description. Okay, let's go ahead and come up here and plug in the stock ticker SBUX and hit enter, and you can see all of this data will automatically load in. You can see this is a 365-day change chart for Starbucks, so the price movement has been pretty choppy, but again, pretty close to its 52-week low. The 20, 50, and 200-day moving averages all down by a decent bit. Analysts have a target price of around $113 per share, institutional ownership around 72%, and a beta of 0.98, so the volatility will be pretty close to that of the market. Now, the first valuation we're going to look at is Graham's valuation, and this was invented by Benjamin Graham, and basically it calculates intrinsic value based on your current earnings and the expected earnings growth, while also taking into account current economic conditions. So you can see right here, we have our forward-looking earnings per share for Starbucks. We then have our growth rate projection, and remember, they're projecting around 20% earnings per share growth over the next year. We're going to go a little bit lower with that and go with 17. We multiply that by 4.4, which is the average yield on AAA corporate bonds, and then divide by Y, which is the current yield on AAA corporate bonds. That number's come down a little bit over the past few months, currently sitting at 4.79, but it is quite a bit higher than we have seen over the past 5 years, which will drive down this valuation. Now, with all that being said, we come to an intrinsic value of $91.05, pretty close to that current trading price, even with our high growth rate projection. Now, the next one we'll look at is going to be our discounted cash flow analysis. And this is essentially a way to project the intrinsic value by seeing how much free cash flow this company is going to produce in the future. So to analyze this, we look at the historical free cash flow metrics for this company. We apply a growth rate projection to the future free cash flows, which in this scenario, I'm projecting 15% free cash flow growth rate. We find the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, and subtract out the total debt to get the equity value. Once we've done that, we divide by shares outstanding to get our discounted cash flow price per share at $96.29, around 5% higher than the current trading price. Now, the next valuation we'll look at is the multiples valuation, and this is a relatively simple valuation, but it can be extremely effective. And essentially what it does is it values a company based on how the market is valuing companies that are similar in structure. So you can see we have companies like McDonald's, Yum Brands, and Domino's Pizza. We take their stock price, divide by the earnings per share to get their price to earnings multiple. Now, the price to earnings multiple for these companies is all pretty close to the same. The average PE is sitting at 26.1. We then take that average PE and multiply it by Starbucks's current earnings per share, and we come to an intrinsic value of $92.57. Again, very close to that current trading price. So it looks like Starbucks price to earnings is pretty close to that average price to earnings for these comparable companies. Now, the last valuation we'll look at is going to be one of my favorites for dividend paying stocks, and that is the dividend discount model. And essentially what it does is it values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the quarterly dividend payouts for this company so we can see our year over year dividend payouts and growth rate of around 10%, 9%, 8%, and around 7.5%. So moving forward, I'm projecting a dividend growth rate for this company of 6%, discount rate of 8%, and that gives us a dividend discount model price per share of $120.84, which is actually a pretty good bit above that current trading price. So if we jump over to our output tab, we can see our four valuations here: Graham's at 91, multiples at 92, DCF at 96.29, and the dividend discount model at 120.84. If we average all four of these together, we come to an intrinsic value of right at $100.19 per share. Now, the current trading price is sitting at around $91.98. So with a 10% margin of safety, you could see the acceptable buy price sitting at around $90.17, and a 20% margin of safety, acceptable buy price at around $80.15. So with that level of margin of safety, it's not quite within our acceptable buy range, but it is very close. Now, this is actually a company I own in my personal dividend portfolio, and if I blow up my growth chart, you can see I've seen pretty nice gains From this position, I'm up around 21.44% with an average buy price of around $78.85. So when I originally bought in, I was able to get in with a nice margin of safety. Now, I will say I think this is a company that often trades at a premium. The company obviously has a very strong brand with many people who consider Starbucks a part of their daily routine. Some would even argue that because of that, Starbucks is somewhat recession resilient. And typically when a company trades at a premium, it's not very often you'll see it fall into an acceptable buy range with a 20% margin of safety. So that being said, I do think Starbucks is trading at a decent value right now. Obviously, nobody knows what's going to happen to the stock price short term, and with some of the recent news, we don't really know what's going to happen to the stock price short term, but long term, I still feel pretty great about holding this company in my portfolio. I think they still have a lot of potential international growth, and I think long term, I'll see very nice dividend growth from this company. So there you go, there is a quick analysis on Starbucks. Like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, then you can head over to my Patreon page at the link in the description. So with all of that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.